Hi folks, and welcome back to our second video on Chapter 9, Evaluating the Market. Here we're going to look at some typical survey questions that can be asked if you or a company, a survey company, is putting something together and you need some information in order to determine whether or not you're paying people adequately and what you might have in your compensation package. So first of all, you'd want to know that you have somewhat of a match, if that's important to you, in terms of asking general questions, particularly the number and location of employees and the main products or services produced. So in other words, maybe if you're hiring or you're looking at compensation levels for people or for jobs maybe in the engineering role that you think might be similar to yours, only in companies that are offering the same products or service or the same geographic area, then you might want to know that they are in the same geographic area, right? Because you want to make sure you only have comparator companies that are like to yours. It could be that some jobs, like clerical people, accounting people, HR generalists, some of those kinds of jobs, it doesn't matter what industry and what employer. You may be pulling those from a local market. So maybe it's just important that they're local, but it doesn't matter what the products or service are. So you have to decide what's important when you're setting up your general questions. It might depend on the job you're surveying. Now, questions you can ask for each job, I'm just going to go through these quickly. First of all, number one is very important. No matter whether the job is a more generic job or it's a specialty job, you first of all want to know if they have any employees describing that are filling the role as you've described it, because you want to make sure you get as close a match as you can. All right. You may also want to know if there are employees that are unionized, and you might say, "Oh, well, I'm non-union, so that doesn't matter." I would say it probably matters even more, and here's why. A lot of times, companies might be losing top talent to organizations where employees are unionized. So you would probably want to know what a unionized group is paying, even if you're non-union, because you could at least try and match that and still not have your organization go non-union or go union, right? So that's a very relevant question. You might definitely want to know for that particular job or groups of jobs you're surveying, what's the average base pay, performance pay, and indirect pay being benefits, right? So that employees are getting in this job over last year. So, you know, it's a good idea to know what they were paid maybe this year and what they were paid last year, so you can get an idea on average how much their pay increases are going up. If yours are going up more, you might find you're overpaying them. That yours may be going up more only because you might find you're underpaying and you need to increase that, right? So that question is relevant. To know what the minimum, maximum, and midpoint is for the pay range for the job is very important. You may find that your job that you're surveying is paying on average $65,000 a year. Maybe that's your midpoint. It might be somebody's maximum. So you might find, boy, I'm overpaying. If I'm overpaying, I better know why, or I better figure out a way to kind of bring those salaries into line. Right? You may also find that the fact that you're overpaying is allowing you to attract better talent. But how are you going to justify that you're overpaying? And if you can't, how are you going to bring those salaries more into line? The other thing is, on what basis do employees move through the pay range? So you're trying to get an idea here if they're moving them more in seniority, merit, or based on the number of skills that they amass. So if they're gaining more skills, are they being credited with more pay? Is it strictly merit or performance? Is it seniority? Usually if it's a unionized job, a company unionized job, it'll be usually more seniority and perhaps training, depending. But in any case, you might need to know how. You might be moving yours through the range in a very different fashion. All right? What's the standard work week for the job in terms of hours? Again, you might be paying $65,000 a year, but maybe they're working, 44 hours a week. People paying, some other companies paying $65,000 a year, they might only be working 35 hours a week. So again, to know how many hours a week people are working is very important. And are these employees getting overtime and at what pay rate? You might find that yours aren't eligible for overtime. Maybe they're not, and so you're paying them more at $65,000. Some companies might be paying a particular pay which is lower than yours, but they may also be eligible for overtime and getting it. So again, how do you match these jobs? You need to make sure that you have a match. All right. Other questions that are good to, or other questions that are good to ask are also in a nice chart that you've got in one of your figures in this chapter. And when we go through this section here, how to collect data, I'll probably talk about it a little bit more. But we weren't able to replicate that little chart. It's called Salary Information, a Salary and Benefits Survey, only because the publisher didn't provide it to us at the time we were making this recording. But hopefully we can include it in your course at a later time. But first of all, how would you get the data? Well, a personal interview is nice. Telephone interview is great. Questionnaire, or the internet, an online survey. My preference is always a questionnaire done via phone. Why? Because when the person answers the phone, or when you get them, you have a better chance of getting all of your questions answered when you get them on the phone. People are usually too busy to give you a personal interview, and over the internet you're leaving it up to them to respond, and they may not go to your link to start the survey, so it's always better to try and do it via phone. Actually, that's one of the reasons you might want a compensation consultant to do it, because if they were to call one of their clients, they're probably likely to get a return call back from their client to them, more so than you are if they don't know you. So I always say it's probably better to have an outside company do it, have a questionnaire prepared by that outside company strongly with your input, and do a telephone interview. But those are just my views. Now, again, when you're looking at, I guess we're going to talk about it now, telephone interview is cheaper. Okay, and again, you're going to get higher quality information because you have a chance right when you've got the person there to confirm and clarify any survey questions. Internet surveys are also very good, even in terms of cost, very good. They'll generally generate good quality responses. The problem is you might not get as quick a response rate, and you might not get as high a response rate. We tend to find this even in the classroom with students. When you survey students online, they don't tend to respond as quickly, as if you had them there doing a paper and pencil kind of assessment for you. So it's a little bit different. Okay, when you're looking at interpreting the data, you might want to look at the minimum, the maximum, the midpoint, the average pay, performance pay, indirect pay, and total compensation. And we went through those kinds of questions, and you having to get the answers to those in the survey. All right. Now, one thing I wanted to talk about before we leave this page is, I'm not sure if you could do this, but there is a nice graphic in your textbook. It's a salary and benefits survey. Some of the other things that you might want to include when you're asking questions on a salary survey to get more information than just this with respect to indirect pay, say. You've got vacation. How much vacation are people starting off with? We usually find in different parts of the world that varies as well. In most companies here in Canada, they might start you off with 2 to 3 weeks. Some companies in Europe are starting you off with 4 to 6 weeks. Some companies in Canada are following suit too. Some of them are starting 4 to 6 weeks vacation. So, the point is, what are you doing? You may be paying less, but you might have a better vacation package, right? The other thing you might want to find out is, do you have any alternative work arrangements for people? Maybe they work 4 days on and then they don't work that 5th day, right? Maybe they work on rotation, 3 days in, 2 days off. We don't know what people are working and how many hours they work that day. So you never know when it comes to indirect compensation what people are actually looking for. So you might be interested in finding out what other companies are doing, because you might say that's something that we're not doing. Maybe we should find out what the benefits of that are and see if we can implement it, all right, just to maintain your competitiveness. Now, in terms of analytical procedures, I don't want to go through this in a great deal, but sometimes we tend to find that companies are paying more or less than other companies when we compare what we call the compa ratio. The compa ratio really measures your mean or average base pay So we're looking at your mean or base pay divided by the midpoint, because you might want to get an idea here of how much over the midpoint you're paying people. Why? Because the midpoint should be the point at which a well-trained, successful employee should be paid. That's kind of your average, your barometer, and you should be trying to get all your people up to there. If they start, as I say, walking on water, then we look at paying them more than the midpoint. But the idea is that anybody who's good at their job and performing well should be at that midpoint. But if you've got people that are earning more than the midpoint, then the comp ratio is going to be greater than 1. So you may have to justify to your management why we've got all these people being paid over the midpoint, because we might find in some job classifications we might have comp ratios of more than 1 and some of less than 1. So management might wonder, why do we have that? You might have to explain that. It could be that you have a lot of people who are long-term service employees and maybe they just kept getting merit increases. Maybe management would say, well, those people aren't walking on water. They're good, but they're not that good that we should be paying them that much. Maybe we need to go from merit pay to a merit bonus. Say, for example, a one-time add to pay until their pay falls in line with the midpoint a little bit better. So again, you might have to make some different decisions. Now, that depends on what you find from your survey. But if you can look in your textbook, you actually have a really neat survey in your textbook. It's called Results of Compensation Survey just for an accounting clerk. And again, this is one of the items that we didn't have a graphic for at the time we were doing the video. But if you want to look at that, it's called Results of Compensation Survey for an Accounting Clerk. It's actually quite good, and you can look at this as, say, for example, all the information that you've gleaned so far from your compensation survey. You'll see that you've got the minimums, maximum, midpoints, the mean base pay, the amount of performance pay, indirect pay, and total compensation for that job from a list of companies from A to J. And you'll notice in terms of total employment, some are large, where they're employing anywhere from 2,000 to 7,000 employees, and all the rest below 2,000, I would say, are smaller employers. But if you have a look at that data, some of the stuff that kind of stands out to me is that if I look at some of the larger companies, say company F, G, H, for example, and even D, I notice that on average they pay less in performance pay and more in indirect pay than do smaller employers, right? Because if you look, say, at a larger employer, let's have a look at employer H. They pay their mean or average base pay is $25,000 a year, $25,050, which is certainly lower than the base pay of smaller companies. But if you look at their performance pay, they got no performance pay. But what do they offer is they offer indirect pay, which is quite substantial. Right? $8,768. So my point is that sometimes we find that some of the larger employers may be compensating their people differently. They might say, well, we pay them less in performance pay because we give them a better indirect pay package than most other employers do. So again, this helps you to assess the data a little bit better, so you kind of get an idea of what these employers are doing. If you look at some smaller employees, you'll notice their base pay is a bit more, right? Their indirect pay is a little bit less, right? And their total compensation is quite good in comparison to some of the larger employers. So that might mean that they have to work a little bit harder and pay a little bit more to maintain their employees in that position. So you have to decide, if you're a small employer, do you need to do the same thing? Do you have turnover issues? What are your issues? I always say to people, it's always been my experience that you don't have to do a compensation survey for absolutely every job you have. If you don't have any issues, if people aren't leaving you, if you don't have any concerns and your employees seem to be very well adjusted and very happy, you're not hearing any rumblings, you may just want to focus your survey on jobs where you are having problems, because every so often, for pay equity purposes, you're going to be doing an internal reassessment anyway. So we're looking at going outside to look at jobs, mostly if we know that there are some red flags or issues that we have. So you have to be able to interpret some of the data as well. And again, when you have all the data as we have in the compensation survey for the accounting clerk, it'll also show you the compa ratios. You'll notice here that with the larger or the smaller companies, they've got compa ratios over 1, but you've got a large employer there, and some of the other large employers, they're not as far over 1 and even at 1 or even less than 1 in some cases. So they're keeping their base pay in line but giving more indirect pay. So again, you just have to know what the market's doing and then decide where you want to be. It's very much a cost-benefit decision on the part of senior management with the input from the compensation manager. So now, some limitations of some of these compensation surveys. The first one that stands out to me is the match, and that's why we ask the question up front. Do you have a job that matches this? Because if you don't, again, you don't want to include it in your survey, right? You want to make sure that you're not omitting any important information, right? It's not a simple process to actually define indirect pay and performance pay. You might want to find out, if you're trying to get people participating in the compensation survey to talk to you about, on average, how much performance pay they're paying. You might want to ask them a little bit about their performance plan or their indirect pay plans, because they may be offering more because they're offering more expensive plans than you. Nothing's to say they're the same indirect pay plans or performance pay plans that you have, right? We can't make any assumptions about what other companies are doing when it comes to compensation strategies. We can't pretend to know. We can't pretend to predict. Okay, you have to make sure that the companies that you want to survey or include in your survey are. So you can't assume to know what some of these companies are doing unless they are in your survey. Sometimes I find some organizations tend to jump to conclusions, and they say, oh, there's somebody in our labor market, because accounting clerks, for example, are in our labor market and they're in the oil and gas industry, and we, are in heavy manufacturing. But I wonder what the rest of oil and gas is doing. They're probably all paying more. Well, don't forget, a lot of that is geographic too, right? We talked about that at the beginning. So don't take the results out of context, right? And again, not everybody's going to tell you the truth. Not everybody's going to tell you everything, right? So there may be some bias in the firms that are responding. And that's why I think it's always worthwhile to invest the money if it's an important survey to you and get a professional compensation company to do it. There are many, many out there, many very reputable ones. And I would advise you to use them because they know their clients best. And they also know that, you're a client as well. They are going to protect the anonymity of all clients, right? So the idea is that they would also not include any data in there that they knew to be false, right? So again, I think it's always a good idea to go with a compensation firm. Now, the other thing I wanted to say about compensation surveys is that companies do try and protect the anonymity of their clients. So in many cases, what will happen is that your compensation firm, if you get a professional firm to do the survey for you, you can craft the questions with them. You can tell them what companies you want in the survey, but they'll basically give them back to you as company A, B, C, D, E, F, G, that kind of thing. They won't tell you what competitor that is of yours. Sometimes you can tell by total employment, sometimes not. Sometimes they might not tell you total employment, only if you might ask. They might put the results together based on groups that they think are more closely associated with you. But again, they don't tell you which company it is. And in fact, they may even find that some companies, even their clients, may not participate unless they can get a free copy of that survey. So you will be paying as the requester for a survey, but your people that are the companies that are in the survey may be getting it for free. Now that might not mean anything to you, but sometimes that means the price of the survey could be higher, right? Because if a company is going to participate, they want to know they're going to get the results. So again, it's a nice thing for you. If you're ever called to participate, you might want to ask for the results for free if they're doing it on behalf of a client, because that way you might get some good information and have it for free, right? So now the last thing I wanted to remind you, of course, is have a fabulous week. keep moving forward in your course. Don't forget to check your outline, check your due dates, and make sure you plan for what's coming due. So anyway, have a great week, and we'll see you online.